Hello, new trader. Welcome to BHI Academy. In this academy, you are going to be exposed to a lot of things that you probably have never been exposed to before. You learn new things, you hear new things, and you are going to grow from being a retail trader to being a smart money trader. It's going to be a long journey, and it might also be a short journey, depending on how fast or slow you go. So in this introductory video, I'll be telling you some things about retail metrics that you probably already know or you probably have used before, but you have not been able to get good results using those methods. If I start mentioning the names of all these strategies out there, you are probably familiar with one or two of them, and you probably use one or two of these strategies in the past. The most popular ones are support resistance, trendline trading, divergence. We also have trendline following strategies, moving averages. Moving averages. We also have moving average crossovers, exponential moving averages. There's also, see, I really do not know much about retail methods, but I can still try to crack my head to remember some. I remember these are stochastic, RSI, momentum, and so on and so forth. There are some complicated ones as well that I've never really tried before, but they are out there and people are making use of them. Another one is the use of robots. There are a lot of people out there selling different kinds of robots, but the point is I'm yet to see a robot that can trade effectively over the course of 6 months without blowing up the account. I'm yet to see a robot that understands risk management. I'm yet to see a robot that actually do know how to trade. If you have one, you can share with me and I'll be glad to test it. But yet, I've not seen one. Okay, so what is SMT? Because I know you've already seen on the chat, which says what every aspiring SMT should know about retail metrics. SMT can mean three things. Number one, it can mean smart money trader. Number two, it can mean smart money techniques, or it can also mean smart money tools. So for today, we are going to be adopting the first one, which means you are listening to this video because you want to be a smart money trader. You want to stop losing money using all the retail metrics that do not work. I'll tell you why they do not work. They do not work not because at some point or the other they don't make money, but because they are not consistent. And in order to be a profitable trader, you have to be consistent. You have to be making money in the marketplace consistently. I'm not saying you have to make money 100% of the time, but at least more than 50% of the time, you are consistent in your trades. Okay, so to be a smart money trader, there are some things you have to leave behind, such as everything you've learned before today that has nothing to do with smart money techniques, such as trendline strategies, moving average crossovers, and so on, RSI, stochastic, Bill Williams, and so on. There are more than 1,000 if you start counting. You have to give up on those things. And if you feel like at this point you have a retail method you use that you think you can never leave, or you can never forget, or you can never wipe out of your journal, then no problem. What I would do is hold that your strategy on one hand and then use the other one to study everything you'll be exposed to in this training. And then at the end of the training, weigh the two and see which one is superior. If at that point you still feel like your own strategy that you've learned is still superior over what you will be learning in this series of videos, then let me know. And then you can go back to your retail method. But I'm yet to see anyone like that. I've not yet met someone who was trading retail and after learning everything I teach, they still feel like, or they come back to me and say, no, I prefer to stick to my retail metrics. So I'm not going to bore you with too much talks. We've already spent 6 minutes trying to do some brief introduction. We'll be going into the charts now, and I'll be showing you some things. I'll be pointing out as many indicators as retail strategies as possible, and I'll be showing you why the market goes against all these strategies. In fact, the market is created in such a way that it would always do the opposite of those strategies in form of market manipulations. You probably have heard of market manipulations before, but you might not know what it means. In these videos that you'll be watching, in this concept, this training, you will understand how the market is manipulated and how you can be smart, how you can benefit from their manipulations. So now we'll go straight into the charts and then we'll start picking these things one after the other. First retail strategy that is very popular that we're going to be looking at is support and resistance. And in order to do that, I'll show you guys something and then we'll move on from there. So the first one is if you're someone that trades using support and resistance, this is what they teach you. They teach you that when you see a high like this, you draw it forward, and when price comes to that same high in the future, you take a sell. And also when you see a low like this and you draw it forward, and then when price comes into that low later in the future, you take a buy, right? But just to keep this short, see what happens here. If you took a sell here, price would have reversed on you with just one candle. All these highs was blown out. 1, 2, 3, 4 highs was blown out. Okay, with just 1 hour candle. After 1, 2, 3, 4, 5, after 6 hours of selling, you already think you're a good trade. They take you out with just one candle. That is called stop running in smart money concept. Also, those who were buying on this low, price eventually came around that low, and then see what happened. Okay, let me assume that you know they teach that you use zone, that you don't use a particular level, you use zone. So let's say you are using zone according to what they teach on YouTube, and then you mark this area, you mark this area, you mark this area, and then that forms your perfect triple bottom, right? Or even 4 lows. Then this is what happens. You take a buy here, you put your stop loss probably around here. You put your stop loss right here, stop loss right there. And then what happens? Price spikes down into your stop and goes up. I can point several examples. This is even the easiest and most manipulated retail strategy, support and resistance. It is the most manipulated in the market, in fact, in any asset class that you trade. support resistance is the most manipulated trading strategy. Look at another one right here. This high all the way to all these highs. Then what happened? Everyone is busy selling these highs. Price is forming double high, or what did they ever call it? Price is forming equal highs. Price is forming equal highs, and everyone shouting, "Let's buy, let's sell, let's sell." Then what happened is come and then you place your sell, boom, in that area. Place your sell in that area. Then what happens next? Place your sell with this red line. Then price just sold out, and then up it goes into your stop. But as a retail trader, you probably would have been taking a buy based on this candle. I won't say what this candle is until we get into that particular teaching. But as a smart money trader, what you have to do is what? Pick that black candle, take a buy here based on what this candle is. Those who already know some things about smart money would know what this candle means, and that is what makes a smart money trader different from a retail metrics user. Let me put it that way. So the second one we'll be looking at is um, trend lines. So we'll be looking at trend lines and why trend lines don't also work. In fact, trend lines is the second most manipulated retail strategy. And the disadvantage of trend lines is that they mostly form the best after it has you only see them after they've already formed, and after the market has moved away from where you could have taken your entry. So what I'm trying to say is when you're trading trend lines, it's very difficult to pick it ahead of time because, for instance, let's say someone picks this low, and then you pick this low, and then you pick this low, this triple low, this low, this low, that low right there, this low right here, this low right here, and then you're hoping to take a buy when price comes into this area. Immediately price touches the fourth time, you start taking your buy. Then you have to struggle with some hours of drawdown. If you're strong enough or your stop loss is wide enough, you might be spared. But sometimes you would have taken a sell here. That is what I want you to see. You would have taken a sell here because you would have considered this as a trend line breakout, right? As a trend line breakout, and then this is what you will do. On seeing this massive black candle close, you put your stop, your sell right there, and then immediately price reverses and goes back inside. So it is highly manipulated. That point you think you have a perfect trend line, they break it, they close below it, and then you think now we are ready to start dropping, and then they just reverse, they go back in, and then they continue the initial trend. So it's either they manipulate your trend line, sometimes they weak it, massive weak, they clear out everyone that was having their trade stops already here, or those that already had an entry around here, they weak them out, and then they continue going back up. So it's not a reliable way to trade. Using trend lines, it's not a reliable way to trade as well. Okay, so I would find one more trend line example and how it is manipulated. Let's pick this low, pick that low. Okay, let me just do something like this. Okay, so first touch, second and third, right? This is where they say you take your buy. But now, if you are hoping to take a buy here, do you know that this is what you would have drawn? You would have drawn it like this. You would have drawn it on this week, and then you'll be expecting price to come and touch it the third time, but it did not. It got to this area and then it started going up. But as a smart money trader, at the same time, we would have gotten a perfect entry right here using this candle right there. Again, I will not say what the candle is until we get to that particular teaching. Smart money trader would have gotten a smart move right here to get to that buy. Retail traders would have missed the entry, except you disobeyed or abused the rules that governs trend lines. And the rule is that you have to draw it on the wicks, not on the candle body. So if you follow the rule, you would have missed this entry. But if you disobey the rule, you would have drawn it on the candle body, and it means you have to also draw this on the candle body, and then you do not have any trend line. See, it gets worse. So trend lines are not really reliable. Uh, those who trade trend lines understand what I'm trying to say. So look at another one here. From this low down there, and then 1, 2, 3. On the fourth time, they have a close below trend line. That is what they teach you as trend line break, and then price is ready to sell. Then boom, up it goes again. Then boom, down it comes. So let's find one on the buy side. Okay, let me just pick this one. So from this high, draw it right there. So first touch, second touch, third touch, price wicks it and closes back, you take a sell. Then look at this, price closed above the trend line. That is a fake out. That's a manipulative move before dropping. A lot of people would have seen this close above trend outside of this trend line as a breakout, and then they'll start buying. That's what you thought. Also, would apply one indicator, which is moving average. Okay, let us use our RSI. That will be oscillators. So you use RSI, and then they teach you that when it is overbought, you buy, and when it is oversold, you what? When it is overbought, you sell, and when it is oversold, you buy. So for instance, look at the price here. Yes, look at the price here. I'll just pick a random place. As at this point, this area here, price is oversold. It has gone too deep into the sell zone, right? And then if you take a buy right here, take a buy at this point, look at what price just kept selling. It just kept dropping, just kept dropping. So this is even the worst way to trade, overbought, oversold. It's the worst way to trade. If you use it for divergence as well, they also fail. There's something we call smart money divergence, SMT, a smart money divergence. And for instance, if you use this type of divergence, they tell you that even I have myself have taught it before, and but I don't teach it again. That if price makes this new low, and then the RSI makes a higher low, then price is ready to shift. But what happens? It was only for retracement, and then we continued to sell. Another one here. I'll show you another one. Look at that. Price made a higher low. It's low here. But here, price made a lower low. And then they tell you that price is going to start buying aggressively. But what happened? It just kept on selling. So we are going to stop there, and I can keep going on and on to show you that retail methods are not really what it takes to make money. There are some gamblers who make money using retail methods, but trust me, they do not last long in the market. After 1 or 2 years, you will not hear anything from them again. Then they start selling robots, they start selling all manner of things. Those who trade for years, in fact, as a career, as a job, they don't just sit down with an indicator and then they expect that indicator is going to make them rich. It takes much more than that, and you have to learn what it takes. takes much more than that, and you have to learn what it takes. So this will be the end of this video. I welcome you once again to this training, and I hope our time together is going to be very, very, very fruitful and result yielding.